Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, what a smart rebound we saw from the day's low, given the fact that the Nifty rebounded nearly 150 points from the day's low, and the Sensex also managed to rally somewhere around 550 points from the day's low. So we have shut shop above that 19,600 mark, and the Sensex also, I think, did manage to get back above that 66,000 mark a day ahead of RBI policy. If you look at the sectoral movers, pharma continues its run. You had the likes of Auto and FMCG that bounced back from the day's low. In fact, even the Nifty Bank Index managed to bounce back from the day's low, even though it ended largely in the red. Metals, that pocket ended high by about nearly 2% or thereabouts. Realty pack didn't do all that well. It was down over 1% or so. Among the gainers, Dr. Reddy's, since I said that the pharma run continues, Dr. Reddy's top Nifty gainer, Hindalco, JSW Steel, Tata Motors. In fact, N. Chandra has said that the domestic business of Tata Motors will turn zero net debt by FY24 itself. On the back of that, 2.5% rally coming in on Tata Motors. On the flip side, Divi's Lab, ICICI Bank, Maruti, Apollo Hospital and Bajaj Finance were some of the losers in today's session. Yatin, fill us in about the mid-cap end of the markets.
Yeah. So if you look at the markets, the mid-caps in the first half are doing well. In fact, with the market strength, we saw some improvement in the mid-cap indices as well. If you look at the mid-cap end of the market, clearly we had the mid-cap index up by nearly 0.3%, the small-cap index almost 0.6% higher. If you look at media, metal, auto stocks, they were doing well in trade. As far as stocks are concerned, V-Guard, the stock moved up 10% after the quarterly earnings. We also had the likes of JSW Energy and NLC India. These were the two power stocks which were gaining in double digits, almost 10% higher for each of them. Shyam Metals also, after a quarterly blockbuster result, stock gained nearly 7%. What was not doing well is the likes of Heikel. Post the earnings, the stock was down 4%. Adani Wilmar post a news report which suggested that the Adani Group will be looking to sell their majority stake to Wilmar or some private equity player. The stock faced some bit of selling pressure, down by nearly 4%. GSFC and Gujarat Alkalis, these were the two stocks post the earnings which were quite weak, almost 70-80% drop in profits year on year. Both of the stocks were down by nearly 4%.
All right, those were all the movers and shakers from the mid-cap end of the markets. But on that note, let's take a look at all the stocks that are on our radar this afternoon, starting with Kalyan Jewellers. A great set of numbers, and it was reflecting in the stock price as well, because the shares did hit a 52-week high post the company's first quarter numbers were declared. Profits and revenues both jumped in excess of 30%, EBITDA up 22%. Margins came in a tad lower at 7.4% versus 7.9% on a YY basis. But it's a seasonal demand that bode well when it comes to the profitability of the company. It saw robust momentum in footfalls as well as revenue across markets, including India and the Middle East. And it is about to reach a major milestone, given the fact that it will be launching its 200th showroom in the month of August itself in Jammu. And the company is planning to open 52 new stores rather this year itself, with one store launch in every week. And the management has said that it's on track to do that. And the company is also gearing up for the upcoming festive season with fresh collections as well as new showroom launches. As I just mentioned, that 52 new stores will be launched in this current year. And the stock, look at the stock, it has rallied somewhere around 45% on a YTD basis, and over the last 1 year, 156%. So looks like demand is boding well across markets, and it is ready with a lot of launches and new collections as well. So looks like shining times ahead in front of Kalyan Jewellers.
Absolutely, and the stock has been also doing well, almost at multi-year highs. Kalyan Jewellers has been trading. But in the large caps, do watch out for Coal India. The results and the realizations surprised the analyst community on the upside. In fact, results were much better than the street expectations, in fact 20% higher than the street expectations. Stock was doing well in trade. CLSA has a buy rating on Coal India with a target of 270. Now the e-auction realizations have surprised the street. In fact, the price hikes that they have taken in a gradual basis has helped the realizations. However, there was some impact of the wage hike bill which impacted the overall cost structure year on year. However, if you look at the EBITDA X over burden removal, which is OBR, it fell by nearly 17%. But stock is trading at a price to earning multiple of only 6 times and a dividend yield of 8 to 10%, which clearly makes Coal India quite attractive at current levels. So brokerages are bullish, and the stock is currently at a very good risk reward price point, wherein, as I mentioned earlier, the dividend yield is quite strong.
Right, and brokerages of course have kept the faith in the stock after its first quarter performance. Let's talk about the next stock that's on my list. It's Ideaforge. It listed with much fanfare, at a premium of 93% to its issue price. But of course, over the last few trading sessions, 6 trading sessions to be precise, it has come under a fair bit of pressure. Yesterday, the numbers came out. In fact, right now, if you look at the stock, it is at lowest since its listing price. Numbers have not been all that great, given the fact that we saw a 50% downtick on profit. Revenues also dropped somewhere around 2.3% or thereabouts. Margins literally, halved on a YY basis. But the management was on CNBC TV 18 and said that due to the nature of the business, the numbers are not comparable both on a quarter-on-quarter and a YY business. And the company is obviously actively pursuing new product developments and business models. Management has said that the margins will continue to be in the range of 30 to 40% going forward. And it says that it has a healthy order book at the current juncture, 190 crore rupees or thereabouts. And the defense ministry, in fact, has given a fresh order. It has bagged a fresh order to the tune of 88 crore rupees from the defense ministry to supply surveillance quadcopters. Now, the management is also looking, has said that the company is looking to diversify in the geographical mix, and it says that defense will form a very good part or a major part of the revenue mix going forward. So, all in all, I think even though the numbers have been fairly poor this quarter, things will look up given the fact that drone sector is known as a sunshine sector and it is poised to grow 18x over the next 5 years. And Ideaforge enjoys a 50% market share in the industry. Stock is down 25% from its highest level, but it is still trading at a 50% premium to its issue price. And Ideaforge, as we all know, has some marquee investors, big PE investors, likes of Infosys as well, and Qualcomm Asia as well. So, as the management has said that due to the nature of the business, numbers are not comparable, but the outlook that the company has given is fairly robust. So, we'll have to see how things pan out from here.
Absolutely, and we'll watch out for this stock. But what's not doing well is the chemical sector, and Deepak Nitrite announced their quarterly numbers, post which the stock has seen some sideways movement. Obviously, in the conference call yesterday, the management gave good outlook when it comes to the debottlenecking and expansion plans. Today also the stock was under pressure. Morgan Stanley is underweight on the stock with a target of 1678. Now, Morgan Stanley believes that despite the fact that Q1 was tough, management is talking about uptick in sales and revenues Q2 onwards. Still, the prices for phenol, acetone and key products remain under pressure. Also, the demand environment, according to Morgan Stanley, is expected to remain quite weak. Now, if you look at the Chinese market, which is one of the largest producer of phenol acetone, the prices have fallen, quite substantially, because of which the import parity prices are also going down for a company like Deepak Nitrite. However, the upcoming projects and the expansion plans for the company, which is almost 4,000–5,000 crores in value, are on track, and probably in the next 3 to 4 years, the company will be able to complete all the announced capex plans which are currently on. So, obviously, its growth is on track, but because it's in a chemical and commodity industry wherein the prices have been slightly weak, the stock price should remain under pressure according to brokerages.
That's true, Yatin. Even though markets have rallied so much, this is one sector, the chemical sector, it has not really participated, and stock prices have been languishing. But with that, we've come to the end of this edition of Closing Bell. Of course, if you have any comments, leave them in the comment section below. And of course, for all your other news and updates, stay tuned to Moneycontrol. But before we go, would like to say that we will be getting you live coverage of the RBI Governor speech tomorrow morning at 10 a.m. and post that a post-policy analysis with a battery of guests. So don't forget to tune in to Moneycontrol at 10 a.m. in the morning. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching. For all your other news and updates, stay tuned to Moneycontrol.